Guys, let's dig into the next few columns on our mosaic here, which are the 3 days leading into the current day for the S&P. So obviously 3 days prior, 2 days prior, day prior. So as an example, Thursday, if we're on a Thursday, obviously this will be a Monday, a Tuesday and a Wednesday, okay? They're the 3 days prior to the current day that all the rest of the data is referring to, okay? So I use this pretty much every day, not so much the 3 days, but definitely the day prior as a bit of an overlay to the current day. I guess around events, especially, you kind of want to see, if it's an FOMC day, like I always want to see what the likely outcome or the past outcomes have been when we've rallied into an FOMC or a CPI or an NFP or whatnot, as opposed to just a kind of a up in the air, neutral kind of view. So I think that's important, whether we're bullish going in or bearish going in. I guess you could call this like your swing trading kind of overlay to some extent. So a couple of other things I want to touch on here is, again, just going back to that kind of swing trading mentality. As an example, if we look at kind of a 3-day rolling where we've had a rally, then for whatever reason we've had a pullback, less than down 20 points, and then we've had that reverse again higher. As an example, if we look at the day change here, squeeze that out. Okay, out of 29 occasions, there's been 25, say, that are flat or higher, and 4 that have fallen. So it just gives you a bit of a bias, in that example where we've kind of been bullish, we've had a setback and then continued on that trend, 80+% of the time, that next day will continue on that trend higher. Average there is 22 points higher. So it is kind of significant, 2 times the points higher than lower in terms of intraday moves as well. Another couple of examples here. I won't go through this one, but encourage you to look at large gaps as well. Okay, so large gaps off the back of a positive day. Globex open in the morning, we gap up. Big gap up, after a slaughter the night before, lower. You'll find is very different price action and finishes as opposed to a gap up, are following a rally. Okay, so I think there's about a 20-point difference in terms of Asia session changes when that occurs, just by changing that one digit here from say 1 day prior to a -1 day prior. It just changes the whole context of the day. Another one, looking at how this affects our market as well. There was a really good example this morning, for instance, where US change day prior was very, very bearish. I think we dropped 20 or 30 points. Aussie actually went higher overnight. Those divergences are really interesting. You'll find that a lot of the time our market just wants to take off from open when that happens. It's a kind of an early indicator. So take a look at that. Another example, if you look at, this is one that I do, on the occasions that we are, say the US gets absolutely slaughtered, triple-digit falls, we'll obviously be falling as well overnight. What happens when we actually gap down again on open, okay? You look at these pre-market moves, okay? I think the average is, 15, 20 points, something like that. 2 out of 15, the pre-market's finished red. 13 out of 15, it's finished green. So for me, that's kind of just a standard trade. When we get hammered overnight, just put in that buy limit order, say 5 or 10 points under open. You're going to make money closing out 10 minutes later, the vast majority of the time. So again, encourage you definitely to be considering this as a bit of an overlay to a lot of your trading. when you get in here in the mornings. Very, very important.